All right, today we're going to unravel a business mystery that, on the surface, just doesn't make any sense. We're talking about CoreWeave, a company right at the center of the AI explosion. They just announced some absolutely spectacular news, but then their stock, well, it got hammered. So let's figure out what's really going on. So picture this. You're running an AI infrastructure company, and demand is just completely off the charts. You go out and announce that your revenue has more than doubled in a year. Sounds amazing, right? You'd think your stock would be a rocket ship. Well, in CoreWeave's case, the market heard that news and the stock dropped over 11%. What in the world is happening here?
Okay, so to really get why Wall Street is so torn, you have to look at the good news first. And believe me, the numbers here are absolutely staggering. The bull case for CoreWeave is all about just insane, explosive growth.
Let's start with revenue, shall we? In just the fourth quarter of 2025 alone, CoreWeave pulled in $1.57 billion. I mean, that is a colossal amount of cash for just 3 months of work. And that number, it's not just big in a vacuum. It represents a 110% increase from the same time last year. Think about that. They more than doubled their business in 12 months. That is pure, unadulterated hypergrowth.
And this isn't just a flash in the pan either. The company is sitting on a revenue backlog of almost $67 billion. A backlog is basically just signed contracts. It's future business they've already locked in. This shows a huge, sustained pipeline of demand for years and years to come. You know, the company's own CEO, Michael Intrater, said it best. He called CoreWeave the fastest cloud company in history to hit that $5 billion annual revenue mark. So by any normal measure of success, this company looks like an absolute juggernaut. Okay, so with a report card that good, we have to come back to our mystery. Why on earth did the stock fall? Let's flip the coin now and unpack the bear case, all the reasons Wall Street suddenly got cold feet. Here it is, the first big red flag. Even with all that money coming in the door, CoreWeave lost $452 million in the quarter. But here's the real kicker. That loss is way, way up from just $51 million a year ago. So as revenues are soaring, so are their losses.
But the thing that really seemed to trigger the sell-off was their guidance, what they said about the next quarter. You can see it here. Wall Street was expecting revenue of about $2.29 billion, but CoreWeave came in lower, guiding for between $1.9 and $2 billion. For a high-flying growth stock that's priced for perfection, even a small miss like that can send investors running for the exits.
So what connects the dots here? The crazy growth, the huge losses, and the slightly disappointing guidance? Well, it all comes down to one absolutely enormous number, a $35 billion bet on the future. This is the real story behind everything. Now, to understand this bet, we need to quickly talk about something called capital expenditure, or CapEx for short. It's just a business term for money a company spends on big, physical things to grow. So imagine a little coffee shop that suddenly decides it's going to build 100 new locations all at once. Its CapEx would go through the roof, right? It's spending a ton of money today to hopefully make a fortune tomorrow. And that is exactly what CoreWeave is doing, just on a scale that's hard to even comprehend. The company said it plans to spend up to $35 billion on CapEx in 2026 alone. This isn't just building new coffee shops. This is like building the entire global power grid for the future of artificial intelligence. And this chart just puts that number into perspective. I mean, look at this jump. They spent over $10 billion in 2025, which is already a huge number. Now they're planning to more than triple that spend next year. All of that cash is going into building new data centers, buying up all the computing power they can get their hands on, all to serve that massive backlog. The key thing to get here is that the huge spending and those big losses are a direct result of trying to secure that future growth. So let's put all the pieces together. This isn't just a simple story of good numbers versus bad numbers. It's really a story about a massive, high-stakes gamble. The choice to accept a whole lot of pain right now, in the present, for what they hope will be total dominance in the future. And this table really lays out the whole paradox perfectly. On the left side, you've got the future. That historic growth, the massive backlog of business, it looks incredible. But on the right, you've got the present-day cost to get there. Those huge quarterly losses, the mind-boggling spending plans, and that slight miss on guidance that spooked everybody. And really, this is the entire strategy in a nutshell. CoreWeave is making a very deliberate choice here. They are sacrificing short-term profits, they're sacrificing looking good on a quarterly basis to pour every single dollar they can find into building the infrastructure they think the world is going to need for the next wave of AI.
So, the ultimate question for investors, and for anyone watching this space, is this. Is CoreWeave's insane spending spree a visionary, genius move to build an unbeatable moat in the world of AI? Or is it a wild gamble that is just too big, too risky, and too expensive, even for a company growing this fast? That's the $35 billion question.